And we are rolling. Money Mobsters, 18. We're making some money today, aren't we?
Uh, yeah, in some ways, yes. In other ways, no.
If you're in Google or Amazon, you're making money.
If you're in VG, you're making money.
If
If
you're
you're
in
in
VG,
Nebius,
you're
you're
making
making
money.
money.
If you're in semiconductors, you've been making lots of money. Lots of money.
Yeah.
Shout out to all my fellow Google and Amazon bulls. We'll see what happens tomorrow with Amazon, but it looks like the street liked the commentary, but Google is obviously going to be green tomorrow.
Yep.
Making massive move in the after hours. So we're definitely going to be diving into that. So thanks everyone who's joining us. We've got Robinhood to talk about, SoFi to talk about. We're going to be talking some oil. We're going to dig into the small caps a little bit. And we're going to wrap things with talking some of the billionaire tax, a little bit what's going on in California. Might even get into Washington State. There were some comments made by the Seattle mayor today. So thanks everyone for joining. Hope everyone had a very, very busy but fruitful day with the mega tech earnings Super Bowl. But we're gonna dig right in here. Doug, you want to lead us off with Robinhood, just like overall picture, and since you hold the position, I'll let you kick things off.
So I don't hold as much as I used to. And so full disclosure, I don't hold as nearly as much as I used to, but I still have a few thousand shares left. Obviously, we've seen a pretty significant drawdown. And I think there have been some people who have been anticipating that a miss or some disappointing numbers coming out sooner rather than later. And I think the market has been selling it off almost 50% now in anticipation of those numbers coming out. So to be honest, since it came out yesterday, I've had a whole lot of stuff going on, and I haven't had a chance to dig into all the numbers yet. So I really just have headlines on it. But essential thesis remains unchanged. The long-term investor, I don't feel the need to dump my shares or anything like that. I'm not shook. We do know that this type of company can be a little cyclical, and
Sure.
when it does what you think it's going to do, which is be cyclical, I don't consider that to be a reason to sell.
Yeah, yeah. If you're holding for the long term, um, you know, this is just something that you have to go through. Charlie Munger used to say, if you're not ready for a 50% drawdown, you're not fit to be an equity investor. That's just how he feels about it. And, that can probably even be emphasized even more with a company who is essentially proxy on the market. Here's some of the numbers for folks who haven't seen it. And I'm just going to make this full screen here real quick.
Great. Thank you.
hmm So these are kind of like the main three ways that Robinhood makes money. So on the left, you've got just stock trading, equity. In the middle, you've got options. And then on the right, you've got crypto. Obviously, you want to see this number going up. And I know what we talked about probably like maybe our second or third episode, why I was selling Robinhood back in December was just because it felt very much like we were hitting a peak in the cycle. And I felt that, crypto was sort of slowing down a little bit and that the options people were going a little bit nuts with their options. And the margin book was also expanding. So here's the vintages. These are still growing really, really well. So they're doing a good job here. But, you know, one of the things that led me to this was looking at the total number of customers. So while it's true that they are increasing gold members, I was starting to look at this flattening out here of their customers. Hoping to see their customer base growing a little bit more. And part of my concern was also the margin book, which if I was smarter, I could find it faster. Let's see. I do know it is in here. Aha, here we are. Margin book, yes. So this is kind of a similar view to what we were just looking at, except this one also includes the margin book in the bottom right-hand corner. We can see that flattening out. So when you've
Yeah.
got a business line that's, you're essentially lending people money, let's be real, Robinhood investors are invested in different things than your traditional brokerages. So I felt that the margin book specifically was a little bit under pressure. And one thing to keep in mind, I want to point out, I'm not bearish on Robinhood. I think Vlad is awesome. He's done a phenomenal job building product. March 31st was when the quarter ended. That was literally the bottom of the Iran war and markets. It's only gone up since then. So April numbers, I'm going to be really interested to see what they look like. And if the market keeps selling this thing off, I might get interested again, right? Like it's not like anything else has changed other than the fact that crypto has just been a little bit slow and some macroeconomic things that were relevant in the first quarter might not be relevant moving forward.
So let's see. Jackson, said it's going to be interesting to see the hood chart 10 years from now. We're going to see it roll up and we're going to see it roll down.
Yep.
And considering the macro lately, I don't see any reason to sell if these are long-term holdings for you. The position is unchanged. This thesis is unchanged. They're still being highly creative with their products, coming up with new products to sell, and they're able to execute those. Let's also not maybe no, because that was announced after the fact, after the peak, was that they're going to be the custodians for the Trump accounts. So that's going to drive a lot of long-term growth for them one way or another. And it's nice that it is diversifying away from crypto and options.
Right.
Now,
And that's what you want to see.
For most of the world, Robinhood is crypto and options, and it's going to be that way for a very long time. Much in the way that Google is search, Google will always be search. They could become a TPU, YouTube, Waymo, SpaceX conglomerate, and search actually does die. And in 50 years, that company will still be here and it'll still be growing. They have so many things they're doing well, right? So the question is, will Robinhood be able to kind of break out of that lens that everybody has seen them in for the last 3 or 4 years? And
Yeah.
if so, I think they'll do very, very well.
Yeah, they've had everything go right for them lately, and they seized the opportunity. They've done a really good job of that, right? The whole prediction markets and crypto, and the way that they marketed to get assets on the platform, like they did a really, really solid job. It's about taking that next step, and I think they are definitely going to be successful in the future.
Yeah.
Just knowing how their management runs, and he wants to build more than what it's at right
Yeah.
now, because
He's not done building at all.
no
So
way.
there were a lot of people in like Amit's chat today that were saying, "Oh yeah, I'm waiting for Hood to get to 35 and then I'm going to load up." Those
All
people
right.
always drive me nuts. And then when
Well,
it gets to 35, they say, "I'm not touching that trash."
yeah. Or Matt makes this point a lot. They literally just never invest at all. Like they don't it the stock never gets to their magical bargain basement price, because high quality companies don't do that
Right. It's
typically.
already at a 50% drawdown. What do you want?
Yeah, here's something that's interesting too, by the way. So we just saw their volumes get crushed. Okay. Their profit margin is still at 32. So like, yes, their profit margin does drop down. but because their operating expenses are more or less flat, they can lose all of that volume and assets on the platform just due to market volatility, and they still have a 32% margin. That's not a small, like most businesses would kill to have a 32% margin.
Yeah,
So,
it's still an incredibly well run business. And I think if you're selling because you trade macro trends, then that's fine. You were always going to sell. And if you're selling now, you sold way too late. You should have listened to my boy Austin and sold when he told you to. When he started seeing the tea leaves go the other way.
a little bit of luck involved there. I'll
Look,
keep it humble because I'm about to be arrogant here when we get to Google. um,
yeah, it's a killer business. So the real surprise to me, though, moving on to the next one, the real surprise to me, though, is SoFi. What the hell? SoFi didn't have a giant triple beat and raise. I mean, they do that every time. And then what? They only had a good earnings this time, and all of a sudden they get sold off like they're going out of business.
yeah, so a few things with SoFi. So the top line is doing fine, obviously, but as a bank, the top line is not the most important thing. What's actually important is that you're adding net income and book value.
Right.
Um, so before we get into it too much further, I'll just do the disclaimer, not financial advice. Um, you know, I'm not your investment advisor. I don't know your situation. I'll just let you know, and Dougie will let you know. This is just what we're doing. This is what we're seeing. Okay. SoFi is still moving in the correct direction. Um, when you have weakness in private equity, and some folks have talked about this, that is their customer, their end customer, right? So you've got members on this side, and think of SoFi in the middle. You've got customers, they're gaining customers, and then
Right.
SoFi in the middle sells the loan, and they package it up and they resell it to someone else who wants to buy a bundle of loans. If you have weakness from this side of the pipeline, SoFi has two options. They can either not make as many loans because it's outside of their risk appetite, outside their credit box, or they can make those loans and just continue to put it on their own balance sheet, which, Noto may or may not be doing, because they did do more lending this quarter by a substantial amount, more than they did in Q4. Um, One other thing that I noticed too, and I can pull it up here in the slide deck, is the loan business platform revenue actually went down this quarter. But again, same thing as last stock that we just talked about, Robinhood. The quarter ended on 3/31. So like the entire month of March and most of February, SaaS was collapsing. A lot of these private equity firms have put out loans against SaaS companies. So like they've lent out money expecting to get it back from companies that are getting, re-rated in real time. So their loan book is not worth as much as it was. Therefore, these private equity companies don't have as much money as they used to. Therefore, less appetite for the loans that SoFi is selling. Does all that make
Right.
sense?
Yep.
Okay, so let me just show what that looks like here on the slide deck. So that way people know what I'm talking about a little bit more here. All right, so here's what everyone loves to look at here, this beautiful slide. And that's like the long-term vision of the company, right?
Right.
But what we actually want to look at here is check out the fee-based revenue mix. So you can actually see that in previous years, it was just climbing, climbing, climbing until you get to 43% of the revenue actually being fee-based revenue. This is that capital light revenue that you want, and it actually dropped this quarter.
Yeah.
And the reason for that
So so
is
when
in
we
this.
say fee-based revenue, those are the things that customers hate but shareholders love, right?
I'm not sure if customers hate it because it doesn't really matter to the customer who owns the paper. They're just SoFi is
They're
still
just paying
selling it
fees.
and servicing it, but they're repackaging it and then they're immediately shipping that paper off to someone who wants to buy that paper. And that's why it's good for SoFi shareholders, because what's been happening with SoFi is when you lend out money, you don't have all the cash on hand, right? Like if SoFi wanted to lend out $10 billion in loans, they don't have $10 billion of cash. So what they would have to do is either go get a loan somewhere or dilute shareholders. So what they've been doing is diluting shareholders and then giving out that money on their loans in hopes to get a good return and get that money back. And that's why you hear Noto say all the time, we know that uh, this offering is going to be shareholder accretive. That's what he's talking about. Um, so the fee-based revenue, you don't have to worry about that because you don't actually hold the paper. So you it's not capital intensive. You don't actually need to dilute to get the cash. You just sell the paper, collect the finder's fee, and on to the next one. And here's what it looks like when you break it down for financial services between the non-interest income, which is the fee-based revenue. So from 249 down to 201. Now keep in mind this is still a lot more than it was this time last year.
Yeah,
If you do
year over
year
year,
over
it's great.
year,
Yeah.
yeah, it's just quarter over quarter. Man, this looks ugly, especially if you look at the contribution margin too.
Is there any cyclicality to that? Can we go back another year and see that broken down? So, like, is Q1 always the smallest quarter of the year, or does it ever drop off after Q4?
Yeah, so the product is so new that I don't think we'd have Q1 of 24, or it would be such a small number that it wouldn't really be relevant. Like the base would be so small.
Okay.
But there is going to be a macroeconomic factor here, which is what I just described with liquidity when it comes to private equity. Private equity needs liquidity. If they don't have liquidity, they can't buy SoFi's loans. And then the second factor to this, which is just for SoFi as a whole, is rate cuts. Rate cuts are still going to be largely helpful. If we don't get rate cuts, SoFi is just going to meet guidance. Their guidance does not assume any rate cuts, which
Yeah.
is
Well, I
this
mean,
slide.
then that guidance is spot on.
So what they're guiding for here is $825 million of net income. They just did 167 million. So they're currently behind pace, but of course you would expect the net income to grow quarter over quarter. What does this ultimately mean though? Let
Does it mean that these stocks should take a 20% haircut, 15-20% haircut?
Probably not, and I'll attempt to explain why. So I'm gonna take the view that a lot of analysts take when it comes to valuations. I'm gonna pretend that I'm a Wall Street analyst and like I just look at financials all day. That's my thing. I look at banks. Okay. We're gonna assume that the technology platform goes to zero because basically it's not made any progress in 3 years. I think if we were to be safe, we could assume the technology platform is worth $0, even though we know it's worth more than $0. But for the safe side, we'll say it's worth zero. I'm going to show the tangible book value per share, and we're going to see, and this accounts for dilution, okay, because it's per share. If you just look at tangible book value, it goes up, but there's been about 20% dilution from last year to this year. So that's why we have to adjust it per share. We can see that we were eating the rocks
Wow.
in
Yeah.
22 and 23. We didn't make any progress, and that's because of the student loan moratorium, right? That's also because of rate hikes and not rate cuts. So everything was going on in the wrong direction for SoFi and the macro. Okay, so Trump wins the election. We get some rate cuts. Student loan moratorium is back off. We start making progress here. And in 1 year, we go from 3.89 tangible book value up to 6.41. So that means for every share of SoFi that you buy, the tangible book value is $6.41. So you get a ratio there. which is your price per tangible book value, which is going to be this number here. You can see that when they SPAC'd, it was ridiculous. They didn't have any tangible book value. So this chart's kind of hard to read, but you can see it bouncing from 0.82, 1.8,
If you
1.5
go
to,
to the upper left part of the window, I think that's your timeline right there.
yeah, it's still garbage
It's
though.
still thrown off. Okay.
Yeah, I did try this earlier, but you can see it hovering around 1.5 and then it jumps up to almost 3, back down to 2,
Yeah.
back up to 3. At one point in late 2025, it was hovering between 3 and 4. So like the market was giving it a premium. JP Morgan, right now it's at a 1.87 after today's decline. JP Morgan is at a 2.2 price to book value, and Wells Fargo is at a 1.6. So right now, SoFi, despite growing members 40%, despite growing revenue 40%, despite growing products 40%, which is creating operating leverage in the business, they are not getting any premium for that shit at all. They have SoFi, as I just showed, their tangible book value per share has gone up 50% just in the last year. So if that trend continues, which might not, but if that trend continues, having it at a 1.9 price to book value is way too low, because JP Morgan and Wells Fargo, if you actually go back and look, they have grown. How much do you think that they've grown their book value over the last 4 years? What's your guess?
Over 4 years, maybe they've 5x'd it.
Okay. Wells Fargo and JP Morgan Chase, very similar results, have grown over the last 4 years their book value by 30%.
Okay, so I was way off.
They're barely growing book value. Like it's at the
Oh,
pace
sorry.
of
I was thinking
inflation.
about SoFi. Yeah, sorry. The big banks. Yeah,
The big
30%.
banks. Yeah, 30% over 4 years. SoFi grew theirs 50% in the last 12 months. So how are you not gonna give a premium on the price per book value? Okay, so you understand the point. I'm talking in circles now at this point. What was your big takeaway on SoFi?
Well, this is the most I've been able to kind of see any analysis. Like I said, I've been busy in some other extracurricular activities. And then the most I got to do today was listening to Google and Facebook calls. So other than just seeing the price action and just seeing headlines, oh, these look like, was it a blow off quarter that we've seen from SoFi where they just triple beat and raise and don't even think about it and the stock goes down 10%? Well, I guess if they have less than exciting earnings, they get sold off 15-20%. It is what it is. I've been holding a lot of SoFi for several years now, and I still think that a fair price is probably in the low 20s, 25, maybe mid 20s. But the market's not giving anybody anything right now unless you're in chips. So
Do you have a feeling that there's like a lot of shareholder fatigue with SoFi? I mean, like when I scroll through X, ever since Chris
yeah,
decided to take a job with the company, like I'm sorry, the level of analysis that I'm seeing on X with this company has nosedived. And people are letting the price action dictate how they feel about the business. And that's the complete
yeah. Well,
opposite of,
that's a common thing though, and that's on X. So that's retail traders. That's not big boys and girls.
well, who do you think owns the stock? I mean, 50%. So
That's true.
institutional ownership is 50%. So that's the other 50% is mostly retail.
Yeah. And I think there's a whole lot of people that are sitting around. Then when you look at it that way, there's a whole lot of people holding 50% of this bank, and they're seeing their friends who are all in on semis and neoclouds blowing up, and they're like, "Why am I holding this fintech trash?"
Right.
So if they haven't sold yet, they're looking for an exit, and they're dying to dump these shares on somebody. Now,
Yeah.
does that
Buy,
create a
buy
buying
high, sell
opportunity
low.
for you? Does that create a buying opportunity for us? Maybe. But I'm emotionally, I am in that camp. Like, I'm just like, oh my God, will you please run already so I can like exit this position, because I don't love the company. I just thought there was value there. This is not a mission company for me. I'm not on Team SoFi like I am with some of my other holdings, right? Then I'm like, I mean, it would be awesome to be 100% in on, those three things, or maybe less space this week, but I certainly the people who are bag holding definitely are fatigued, and people who've even been holding since 6, they've been doing that for years now, and they're ready to move on.
Hey, if you've been holding since 6, I mean, you've gotten almost a triple in just a few years. So, like, yes, it's not Micron or SanDisk, but like, I'll
Or
take a
Intel or Nebius, or I mean, we can go on and on and on and on.
yeah, but if I get a triple every 3 or 4 years, if you offered me a deal like red pill, blue pill, and one of those pills was you're gonna triple every 3 years, dude, I probably don't even need to hear the other option. Yes, I'll take that one.
Well, it's the evil genie. You ever play the evil genie game?
Uh-uh.
This would be fun to do in the chat. So it's
Okay.
like you have to give someone their wish, but then you're the evil genie, so you make it terrible, right? It's like you can eat steak every day of your life without getting fat, but you can never have any salt on it, or something like that, right? Like, so it would be basically you take something good and you make it terrible, right? So it's like you're going to get a triple in this stock every 3 years, but you have to hold SoFi. So yes, so to me it feels like that. Again, I have a position. It's not super large, but I thought I saw some value there. My options are good through June of next year at full disclosure, strike price of 20. I still think that's a good bet.
I'm
But
holding my options that are very much in the red. Like it's not
yeah,
anywhere close to the majority of the position, but yeah, I've got like 7 or 8 call options that are like minus 80%.
yep,
Um,
same.
just bad timing, but you know,
But it kind of makes me want to say, well, if it's down that much, I could throw another, couple thousand at it. Same expiration, same strike price, and get a much better deal.
so
But that's
I,
probably throwing good money after bad.
yeah, exactly, yeah. So I like that idea because like if you liked it at 23, you'll love it at 16, right? But
Right.
there's
Yeah.
also contr- on the contrary side, the wisdom of don't don't water don't cut your flowers and water your weeds, right? Don't throw good money after bad. So
Right. Um, but yeah. So anyway,
by the
think
way,
I,
here's
I
our
think
tech
I think
platform.
we can both speak with the same thing on SoFi. We're frustrated with SoFi as a company for the things we've wanted it to do for a long time, as far as user experience and things go, and that might be moving in the right direction, but I still think that most shareholders are getting impatient with this.
Well, I think a lot of people bought for this tech platform, right? They bought into like the AWS of fintech, which I'm sorry, if you were
It ain't.
paying attention and watching the company, you would have known this 2 years ago that that wasn't happening. So even though I'm long the company, like I underwrote this part of the business to basically zero and didn't make it a part of my thesis. Um, one thing that is still part of my thesis though is you still have a ton of money coming from traditional banks into neobanks because the better interest rate, the better service, the product depth isn't as good yet, but they're filling that in quickly, and I'm sure Robinhood's going to be working on that too. But what does Josh Brown say? Money goes where it's treated best,
Yep.
right? So if you're going to have a crappy user interface on your banking app, you're going to give 0.00001% APY. You're going to have a hard time getting a person on the customer service end. You don't have any of those issues with SoFi. They don't have the overhead capital. A lot of people, I think that at first when they started getting into SoFi, they knew the neobank versus trad bank, and that was like a big part of the thesis, is that you don't have all the overhead of branches moving money around, any of that stuff, employees
Right.
working at the branch. That is still there, that still exists, and that still gives them the cheaper cost of funding. It just feels like that's been brushed to the side, and that people forgot that they do still have operating leverage.
Yeah.
Do we have any fun evil genies in the chat? We got Brandon in the chat. What's up, Brandon? Did you meet him in LA? I think you might have.
Yep.
Yeah, he's always on top of things. With that, I think we can
Move on to the next topic.
move
Okay.
along to Google.
All right. Go ahead and all right. Well, let's let me just throw the thing out there. I was on my walk and listened to the call today. So I was talking with my wife, I was walking the dog, and I'm listening to the call at the same time, right? So, did I get everything? Have I had a chance to read the transcripts yet? No. But man, one thing hit me like a ton of bricks. So I'm just gonna set this up from a macro perspective, and then we'll let you dive into the numbers because I can see you're physically chomping at the bit to do this. Q4 of 2025, they did 10 billion tokens. Q1 of 2026, they did 16 billion tokens. That's 60% quarter over quarter. That is crazy. Not just to show that they had that level of additional bandwidth that they could handle. Okay. Just the physical ability to process that much more compute. That alone is an amazing achievement. But second of all, it shows you there is a market there. I don't care how many people are on X talking, acting like troglodytes. I'm saying no one wants AI, blah, blah, blah. It's like, well, I beg to differ with you because people are using it. So maybe they're using it because it's free and it's hidden in a lot of the Google stuff you already know how to do. And AI is just showing up there, whether you kind of want it to or not. And maybe they're not getting paid for that token yet, but it is coming, and we're going to live in a tokenized world. And so that has me then thinking we need to start looking downstream of these tokens, and then we need to take a look at cost per token. How are Google's TPUs affecting their cost per token? And then work back from there and figure out what their profit on these tokens are.
I think we've got some hints, by the way. When we get to
Okay.
cloud operating margin, I think we've got some hints.
Well, you saw that they said their OpEx went up 28%. I thought that's a pretty significant jump as well.
Yeah, I mean they're investing into the business and they're paying high level engineers.
Well, that's not CapEx, that's OpEx. So it costs 28% more to run the business than it did in the last quarter.
Because you're going to have depreciation off of their PP&E.
Okay. So anyway, I thought it bore a little bit of scrutiny, and it might be an interesting thing we can do to work backwards on there, figure out what their cost per token is going to be, and then we can start kind of comparing that with some of the other hyperscalers and cloud providers.
The problem is, and that's a good idea, but the problem is that they don't publicize that information. They're never going to. So the closest thing that you could get to it is actually just paying Dylan Patel to go do that research for you. But I just want to take a moment here and just give a high five to anybody who's been on the Google train. They wanted the CEO fired. They said Google was dead. They said 10 blue links. They said cloud was too small to matter. They overlooked YouTube. When they threw Google in the trash 18 months ago, they didn't even mention YouTube or Android. Yeah, so just if you held on to this one, it was a contrarian bet. You deserve your flowers. Truly. Like if you made money on this name and you've held past 300, that was the other thing. There was like the first round of, Google's dead and the stock was at 160. But then there was the second round of kind of FUD that came into Google over the last couple months, which was it's already doubled. It's at 300. It's expensive. So if you continue to hold again, you've been rewarded once again. So
I sold
really,
at 336. I'm not ashamed of it.
yeah. And that's a very good trade, right? 160 all the way up to 336. Like you're making money. But for those of us who wanted to see the story through and knew that the thesis hadn't fully played out yet, I think we're still going to see more. Crazy as enough as it is, I think we're gonna keep seeing it. I know June was in this one. I think Chell's had some Google. I know Brandon did. Um, I think Laura might have as well. Venom or high fiving. Bam. So just to run through some of the numbers here. These were insane numbers. There's the 16 billion tokens that you mentioned.
Yeah.
And 60% quarter over quarter. So that would be what, plus 240% annualized?
Yeah.
Like
That's AI is coming, y'all. Like,
that's a stupid number.
yeah.
Gemini enterprise paid.
And like I said, and props to them, not only for finding the customers for it, but for just getting the facilities and infrastructure to process that.
Right. Yeah,
That's,
it's not easy to build a
that
data.
trade ain't done. That trade ain't even close to done.
Jumping down into like some of the numbers themselves in the income statement. Well, first, 19% Google search. This is just hilarious, is it not?
Search is
Like
dead.
search is dead, plus 19%. Whoopsie daisy. Here's the income statement. Here is your total cost. This is what you had mentioned, right? 18%. Your total cost going up, but your income from operations is up 30%. And I don't, is that better? That's probably better, right? Yeah, there we go. This number right here, other income, this is their mark to marketing of their securities. So SpaceX, ASTS, Anthropic. So if you're looking at the net income saying, holy shit, 81% net income increase, keep in mind that a good chunk of this is actually coming from appreciation from Google Ventures and investments that they've made. There's still probably a lot left to come on this. If I had to guess, Ruth and the CFO are being, Ruth Porat and the CFO are being very cautious with this. The worst thing that you could do as Alphabet right now is say, oh, SpaceX is going to IPO at 1.7 trillion and Anthropic's going to IPO at 900 billion. And then you realize $200 billion worth of gains. And then the IPO flops and then you have to take it off of your income statement when that happens. So I
Right.
think they're being conservative here, but really this is the number that I'm looking at here is the income from operations. Keeping it rolling. So this is company wide. The margin's improving. Why is the margin improving? Well, it's mostly because of this next line item here, which is Google Cloud. 63% growth on Google Cloud.
Boy, it's almost like the token generation is tied directly to their cloud revenues.
Yeah, exactly. Exactly. Tokens equal money. It's That's what it appears to be in the 2026 economy. If you can make tokens, you got dollar bills. And we can see what's happening with the operating margin of cloud going from 18% up to 33%. That is insane because what it does is now instead of doing $8 billion of net income a year, you're now doing $26 billion of net income. So now cloud has gone from being just like a small slice of your business to like, no, cloud is now meaningfully contributing to the bottom line. And this is only going to, if they grow at 63% for the next year, which I don't see why they couldn't. Is Claude going out of style anytime soon? No, it's actually increasing. Is
Right?
Gemini going out of style? No, it's
Nope.
increasing. What about Codex? Like OpenAI and Microsoft have just fractured their relationship. So where are they going to get their tokens from? Well, Google Cloud and AWS. So this number is only going to go up. So what does it look like if, you know, 2-3 years from now, Google Cloud is doing 75 billion or 100 billion dollars of operating income, and now you've de-risked the whole company because now you're not just the search company, you're not fragile to one business line, now you've got two business lines rolling in money.
Yeah. And you're still not counting the distribution platform that is YouTube that controls a lot of not just like media and ads and everything, but they also have a very powerful control over just the standard zeitgeist of, what are people talking about? What are they doing? What are they going? Where are they going for their information?
Yeah, and that's something that can't be vibe coded away. YouTube and Instagram, they're not going anywhere. To zoom in on this a little bit here, I'll try to do my best. This yellow section, this burnt yellow, orange, yellow,
Yeah,
I'm
yellow.
colorblind, who cares? It's up 19% year over year. So this is your Android devices. These are like your watches, right? These
Yeah,
are, but it's mostly your subscriptions. This is Google One and YouTube subscriptions. So we go up to the top of the slide deck, we can see 350 million paid subscriptions between Google One, which is mostly going to be like Drive, Google Drive, cloud storage.
yep,
This
yeah,
could also be Gemini subscriptions too, but probably not that many. But this is mostly going to be YouTube. So this still has a long runway to go because a lot of fucking people use YouTube. So if you have 1 billion monthly active users on YouTube and only 300 million of them are paying that subscription, that's 700 million people left that you can convert. And if you don't convert them, you can show them advertisements.
yeah.
You win either way.
I was actually taking my walk when they were talking about that, and I was thinking to myself, I can just see a universe where they're gonna eventually pull the rug on us and just say, nope, no more paid subscriptions. We get way too much money from the ads. It's
Or they'll
not
make
worth it
another
to
tier.
sell subscriptions anymore. Yeah,
Yeah,
like ad
they'll do
light.
it like Hulu did. Yeah, exactly. Hey,
Yeah,
don't
you
get
can
any
skip
ideas.
one ad per hour, not two.
If anyone from the anyone from the YouTube team is listening to this stream, please don't do
Don't.
that. I like my premium the way that it is.
Okay, so
But before we move to the next one, I am curious what this does to like the PE ratio. Them realizing $37 billion. I am just curious to see like, because if we look at the net income chart, it's a little bit stupid right now. It's a little bit stupid right now, the net income chart, right?
and it was already stupid.
It was already stupid, yeah.
mean,
Yeah.
those are billions and billions and billions of dollars. Let's not forget that.
So a
They're not just
30
little, they're
PE,
not just little blue bars.
the 30 PE was based on these four numbers here, right? In
Yeah.
2025. If we were to like extrapolate this forward, well, let's not extrapolate it forward. Let's take it out. Let's give them the let's give them $62 billion that they've already got. But let's fudge some numbers here and see what it would look like if we did 67, and then if you just didn't have them, if you didn't have them realize any more appreciation. So the income from operations was about 40 billion, right?
Right.
But they realized about 37 billion. So the net income was 62.5. They realized 37. So this would have been their net income, 25.5. But the income from operations is growing 30%. Now their expenses are going to grow too. So let's just be conservative here. And we're just going to give this a 0.125. We're going to say net income, excluding the appreciation in their investment portfolio, is going to grow at 25%. So we
Okay.
can say quarter two would be 31.8, and then quarter three would be 40, and then Q4, I'm going to give this one a multiplier here because it is Q4 after all. I'm going to give it a 10% multiplier. Is that fair for
Yep.
Q4 seasonally? Okay. So we're going to have four numbers here. We're going to take 67 plus these four numbers. This is how you do back of the napkin math, guys. And you have to be careful what assumptions you're using here. But this is a decent idea for like how you can come up with a loose estimate. That way you're not drastically overpaying. So you get net income for the year 192. 192. And the market cap is 4.23 trillion, but we can't use that because it's delayed. It's up 7% after hours. So we have to factor that in. Let's just do shares outstanding, which is 12.1 shares outstanding. What do you think it opens up at tomorrow, Dougie? 370, 375?
I think actually it's good. It's going to have a pop at the beginning of the morning when retail buys in, and I think there's a little bit of a rug pull. You know, the standard 10:30
Okay.
a.m. Well, 9:30 a.m. rug
So
pull.
maybe better question. What do you think it closes at tomorrow?
I'll be surprised if it didn't close exactly where it is.
Right now, 374.
Yeah, 370.
Okay.
I mean, you know, give it 0.5% up or down, but I imagine it'll be a pretty flat day.
Okay.
You never know. Like we could have peace in Iran tomorrow, and then who knows? But
So just a hair over 4.5 trillion is what the market cap would be. So now we can take that and we can divide it by
shares.
192. No, divided by the net income for 26 that we just calculated. Because I did
Oh, did you get
374.
your multiple? Okay.
Yeah. I multiplied it by 12.1 billion shares outstanding. So again, the assumptions were that net income from operations is going to grow 25% in Q2, 25% in Q3, and then 35% off of that base. Wait, that's not right. You know why that's not right? These aren't annualized. These aren't year over year. These are quarter over quarter.
Over a quarter.
Otherwise, it would have been a 23. So it's going to be worse than a 23, but definitely lower than a 30. Let me
Next
redo
time we
that.
do this, we should pull up a spreadsheet so people can see all the numbers and keep the we can label the values.
Yeah, that's a good idea.
What do you think, chat? Should we start the start this over again? Just pull up a quick Google sheet, and I think we should do that. Let's show how the sausage is made here a little bit.
We'll have to do it Steve style here. Sorry to Steve viewers here. I am not going to be as fast as Steve here. Okay. Holy smokes, way too far in. All right. So we had 67. Let's see. It's 67.2. This is Q1, Q2, and so on. But we are going to adjust this because 67 is not actually 67 because 37 of it came from investments. And then we're going to do growth rate of 25%, but we have to divide it by 4 to annualize it. We're going to drag that across here. This one is going to be 35%. Oh, look at this. It already knew what I wanted.
Yep.
Oh, if I didn't mess it up. That's fine. Oh, this should be multiplied. This should be multiplied as well. All right, we like that number better.
Yeah, there you go.
So this is with investments. No investments. So super simplistic model, right?
Right.
So if you have market cap here, because we're going to go up tomorrow, 7%. Market cap is going to be 4525. Let's see how many zeros we have. Oh, I need my commas. What would I ever do without my commas? Okay. 1, 2, 3, 1, 2, 3. There we go. This market cap. Shares outstanding. This is 12.1. So to get the PE, we need to take the market cap divided by our earnings. I did something wrong there, but it looks like it's going to be a 33 PE. Oh, you know why it's wrong? We have to add some zeros here.
Or get rid of some zeros.
There we go. Yeah, because this is in billions, and so is this.
Yep.
There you go.
Yeah.
So if you assume If you make these
And the
assumptions,
33 PE is like right at traditional kind of technology levels.
right? And 25, again, 25% is the rate that we used for the next 2 quarters.
Yeah.
They just grew their income from operations 30%. And this assumes no additional
No investment.
appreciation.
Right.
So do with that information what you will, folks. I don't think that it's expensive. I'm still holding. Are we seeing anything interesting in the chat here? It looks like Laura's using Claude to
Yeah.
set something up.
Laura's writing she's Claude coding an investing application for herself as well. Everybody's doing it.
Am I? Yeah, everybody's doing it. I'm like sitting here thinking, am I
Are
the
we the
only
last
one?
two that haven't done it yet?
Maybe. We'll have to
Maybe
piggyback off
that should be
Matt.
our episode one time. Is we're gonna finally do it, and we're gonna do it live.
We'll
So
do
we
it
can make all the
live.
mistakes. Yeah, no, we can make all the mistakes, and everybody can be like, "Oh, these idiots." Okay, so we spent a lot of time on Google, and you understand that business really well. So I just want to move on. I didn't even see what Microsoft did. I think I saw it was a small beat, like just a couple of percent.
Yeah.
I think Meta was a small beat, a couple of percent, but it got sold off if I remember correctly.
Yeah. Meta raised capex.
Okay. And for some reason, everyone hates that now, but I don't.
I think it's because when you look at the other 3 hyperscalers, they have cloud revenues already, whereas Meta doesn't. So they're adding, they need more of a discount rate because they're having to factor in that you're standing up a new business line from zero. And, there's been a lot of talk about how are these hyperscalers actually using AI and are they getting their money back out of it? I think Mark's case is, hey, we are already using AI. Even if we just use this internally, we're getting our money back because we're using it to better our algorithm, our recommendation engine, et cetera, et cetera. But they don't have a cloud division, right? Where,
To resell
yeah,
what they're building. So
because what I just did with Google, I pulled up the Google Cloud platform, and I said, hey, look, it's growing 60%, and it's going to be a profit center. Meta doesn't have the ability to do that yet.
right. Well, that's where I look at something like Microsoft and I'm like, okay, well, y'all aren't okay outside of selling Azure services, right? We don't see Microsoft making money on products that they're generating using AI for end users.
Copilot.
Please.
I know it's bad right now, but look, wasn't Zoom really far ahead of Microsoft Teams? But
No,
Microsoft had the distribution.
because they had Skype, they just weren't using it.
Yeah, but then they were able to corporatify it and put it into every single enterprise who already runs
It's just Skype.
M365.
It's just Skype.
Yeah,
They
I
just
understand
put
it's
another
not hard to
name. They
do.
just slapped it. They just slapped the Microsoft brand on it. It's just Skype.
What do you think they're doing to Copilot? It's just GPT. Is it not?
No, it's not. OpenAI still owns GPT.
But
No, you use Copilot and then tell me that it's ChatGPT. Like I'm not a big fan of OpenAI and ChatGPT, but I can tell you that like one is a Ferrari and the other is a Ford Pinto.
but don't both of those cars still get you to the supermarket?
That may have been a slightly worse analogy. What? Okay, one's a horse and buggy. Yeah, the other's a Ferrari.
It's not that
Yeah,
bad.
they'll both get you to the supermarket, but one
So
is a pleasure to use, and you can get a lot of stuff done with it.
I use Copilot at work. It's better than the leading frontier models were from 2 years ago. So like it is behind, there's no doubt about it, but it's
I
still
mean,
way better
Dougie's
than
law,
anything
but
that existed 3 years ago. Exactly, Dougie's law too. Like, do we really think that Microsoft isn't going to figure this out?
No, they never figured out Clippy.
Different era, different incentives, right?
Yeah, Copilot will get better, but it's like Laura says, Copilot will get better because it's the one you have to use at work because you can't use the tools you use at home that do the stuff you really want to do.
Yeah.
It's like if you have Spotify at home or YouTube Music or like a premium music service, but then you go to work and they have like FM radio, like internet radio or whatever it was, right? Where like the channel you can listen to the FM radio station streamed through your browser, but it's not even close to the same experience. But yeah, technically you're still listening to music.
Is it an inferior product? Yes. Will it be shoved down every enterprise's throat? Also, yes. Like they have the distribution, they're just going to tack it on. And the day is coming, maybe not this year, maybe not even 2027, but the day is coming that Copilot will be a $10 billion a year business line.
Oh yeah, and then Microsoft is going to get sued again, and they're going to be back in court for antitrust violations for bundling. I mean, they're gonna lose the same way that they lost for bundling Internet Explorer with the operating system. I know this is before your time,
but they didn't get in trouble for doing it with Teams. That was a bundle and dump, right?
Not yet.
Not yet. Well, they're not going to in this administration. I'll tell you that. Here's some of the numbers. Did you want to go through them? Because you said that you hadn't seen them.
I hadn't seen them, and I don't want this. I mean, I know everybody and their mother has probably talked these numbers to death. So I don't want to spend too much time on here, and we can if you want to, or if the chat wants to as well. But I feel like they've probably been done. I was really wanting to talk to you about Google and Amazon specifically, but
Okay.
we can go through Microsoft. We can go through Meta. That's fine. I did get to listen to some of the Meta call.
You brought up Microsoft.
Yeah, I brought it up because it was today. But I was just kind of ticking off. Like, I mean, I know they had small beats. I felt like Microsoft might have had the best day stock wise, but going into it because it had been so beaten down already. But I mean, software just got annihilated again.
Have you seen the graphic going around X about Microsoft and the vibe coding? There's been, let me see if I can find it here.
Yeah, Jackson makes a great point. Like, what else is Microsoft even working on? Well, Azure. But I mean, Microsoft's devices are dead, right? I mean, gaming is now a cloud platform, so they're not going to sell a whole bunch of devices. The Xbox product line is essentially dead. I mean, they are selling subscriptions now for gaming, but I feel like devices made them a lot more money.
Yeah, Xbox revenue is actually down as well.
Yeah, part of that's because no one makes good games anymore, but that's a whole other thing. They refuse to make good games. They insist on making bad games and then tell us that we're the problem, and then tell the customer that they're the problem.
Well, what they still have intelligent cloud that's growing 40%. So that's going to be a huge business for them, and they still have enterprise vendor lock-in with M365. So like they definitely still have good things going for them. I mean, they grew at 18% top line. Like this is not a dying company by any means.
Yeah, no, their cloud services alone is a bedrock they'll be able to live on for decades. And they still have an enormous operating system installation base. I mean, even with all the compute going on out there, nothing is coming close to replacing the corporate laptop.
Not even foldable phones?
Bro, I did accidentally leave my laptop at home one day, and I went in the office, and I was able to do all my work on my phone. And it's an Android phone. But just because of because I was able to like have all the apps installed, I was able to do all my work on my big screen monitor with my laptop and keyboard just through my phone.
That's
because everything was on SharePoint and clouded and everything. So do I need a big laptop? No.
no, you do not.
Buy me a foldable phone.
Do you think that'll become the new normal?
It should, but I don't think it will. But so, I mean, there's lots of specialty applications you couldn't open on it. Like if I wanted to open like, cringe with me here, but like when I had to open like Adobe apps and stuff like that, I really couldn't do it. But as far as just like opening kind of my regular Microsoft Suite applications, that all worked fine. But to do like my large PDF edits and stuff like that, that didn't work. So it was a little bit like, okay, well, pick the tasks you're working on today, and you can do a bunch of work. But there are certain tasks that you couldn't do without it. But that's just a software question. But software is all going to zero because the price of oil is up. I didn't know if you know that those two things were directly related.
Well, of course. Yeah, if you don't have any oil, software goes to zero. Because oil, that's an input to software. You have to have. This is how it works with software, Dougie. You put the oil inside of the computer, and then it spits out code.
Okay, of all of everything in the market, the thing least dependent on oil might be software. But I think I messaged you though. It's actually a proxy against rate cuts, and that's what software needs is a low rate environment.
I would love a low rate environment. That would help my SoFi position immensely. I can't believe I didn't bookmark this Microsoft graphic. Now I feel like a big silly goose. Apparently Microsoft is at a 25 trailing PE. Meta is now at a 16 trailing PE. Based on the big giant EPS candle that we just discussed on Google, they're now at a 17 PE.
That's disgusting.
That's very gross. Do you think that they'll continue to see that investment income?
Yeah. I mean, as long as they're not investing in software.
Sure.
I mean, to be honest, for every dollar they spend in NeoCloud, they should probably also buy stock in circular financing.
Here's another look at that. I'm looking for this Microsoft thing, but I came across this, and it's just too good. Too good. Isn't this ridiculous?
That's not Microsoft, bro.
I know, it's Google. It's
okay.
Their backlog growth.
Oh, okay. That's insane.
Yeah.
Like, why even bother having a job? Like, or why even bother starting a business, I should say. Like, you have your job and you have a paycheck. Why bother starting a business? Just give your money to someone who's better at running businesses than you are.
You can make that argument.
You can.
Okay, well, I'm gonna officially give up on trying to find this graphic here, but the gist of it was M365. They've got the main ones. They've got Word, Excel, PowerPoint, SharePoint, Teams, Outlook, and now Copilot's in the mix, and Copilot's going to be able to grab all the information from all these different apps. It's starting to be able to do that. It's still not great, but it's starting to be able to do that. And then you layer that in with all of the cybersecurity apps that they have. The graphic that I saw had probably like 50 or 60 different Microsoft apps, and the post was basically labeled, "Hey, how are you going to vibe code this away?" The answer being a rhetorical, "You're not." Um, so I just thought that was interesting because you hear Steve talk about it all the time, how the enterprise user base is not going anywhere. And working in a really large company, I couldn't agree more. I've worked at a few large companies now, and it's been the same exact situation. Like, there is so much pricing power that Microsoft has over these companies.
Yeah. So it's not it's not that they're going away. It's not that you can vibe code it. It's just that and you said the magic word. It's the pricing power. It's that customers are going to be more likely to look into items that are not, when Microsoft comes back to all their customers and they're just trying to force 10% year over year price increases, eventually they're going to say no. Maybe I can't, vibe code this or that, but I'm going to try. Or I'll consider making the switch to Google One.
Okay, so let's like walk through that thought experiment because I think it's interesting. So let's say you're the business and I'm Microsoft. I'm gonna increase prices on you 50% starting next year. And you're the organization. So say you're like an insurance company, you're a bank, what have you. You have tens of thousands of customers. All of your customer data is on Microsoft. All of your workflows are on Microsoft. That's what all of your employees know how to use. How are you going to transport all this user data from Excel over to Sheets and have everything work seamlessly and not have any hiccups? Like, doesn't that just seem like a really risky proposition for your business?
Talk about something that you could vibe code. Claude could absolutely do that.
Yeah, so then where is the enterprises moving away from Excel? Like, there's not a single one. Like, Claude has been able to make an Excel for what, probably a year now, if not longer.
Yeah.
So why have we not, like, Claude and Anthropic and OpenAI, they don't even use their own internal workday. They still use the actual workday.
Yeah.
That should be
Totally.
super
Yeah.
easy to eliminate. So like, why haven't they done that yet?
I don't know. I don't know what to tell you.
But do you see like the counter argument?
Yeah. Well, because it's not just vibe coding. It's like also all that Excel stuff, it runs on infrastructure. It has, decades of support and institutional knowledge into it. But I dare you to find more than 5 people at Chevron, for crying out loud, that know how to use more than 10% of Excel's ability. Furthermore, who are even authorized to use more than 10, who have the permissions to use more than 10% of Excel's abilities. So what I'm saying is Microsoft is selling you, a they're selling you a farm and all you need is a garden.
At the enterprise level, though, doesn't everybody need a farm?
No, like I just said, they don't know how to use most of it. Most people in the corporate world don't know how to do more on a spreadsheet than type in some numbers and highlight some colors. Some of them know how to quickly make charts. Very, very few of them know how to use data labels. And they can do simple formulas, but don't ask them to do a VLOOKUP or an XLOOKUP. They don't know how to do that. They think it's magic when you do it. And this is stuff from 1990s, 2000s.
Sure.
So 95% of all the users, sure, they can use the Power BI dashboard, but they have no idea how to create that, and they don't need it. So why are they paying for it?
Well, they wouldn't pay for it. They wouldn't pay for that seat, right? So if it's
No, they're
something,
paying for the Excel seat, and it does all this amazing stuff. It's incredible software, but they don't need anything that complicated, which means they don't need anything that expensive.
right? Yeah. So my job would be a good example. I just need a very basic level Excel. But there's a reason that my company doesn't give me a vibe coded Excel, or like has even started the process of moving any of these workloads over to a vibe coded Excel, because all of, like, there's a network effect here with the ecosystem, because it's all working together. It's kind of like Apple users on the consumer side who like how smoothly everything runs together because it's all made by the same company. Microsoft has that working on the corporate side, right?
Yeah, I mean, look, we can debate, whether Microsoft's applications and what the fair pricing is now that it's all subscription based and seat based. Till the cows come home. I'm just telling you anecdotally. I know very few people that fully know how to use the full Microsoft suites that their companies pay for, and they pay a lot more for those than that's something like Outlook. That is your entire back end as well of all your email and all your storage. That actually is more value than some of the front facing apps like word processors. And like, do we really need a word processor in the world of AI?
No, we don't. I
I
have
don't believe anyone said cow.
yeah, till the cows come home.
Oh, well, multiple cows, not
Hey
rabbits
Dougie,
named cow. Yeah,
what did the cows invest in?
I'm sure I don't know, but I
Mutual
know you've
funds.
been working
They
mutual funds.
invested in mutual funds.
Mutual funds. All right. That is some Amit Kukrija level of humor.
That's what we're here to do. June said rabbits. Come on, June. We're not investing in rabbits. You wanted to talk Amazon?
I mean, somebody said to sell right before, like 20 minutes before earnings came out, before the bell closed. Somebody said time to
No.
sell.
No. Don't tell me it's true.
Yeah, somebody said it is time to sell. Consider hedging your position, sell a portion or close it out entirely.
I think the same person might have also been tweeting articles about search being dead. Um, yeah, I'm not sure about that one. I'll try to be nice. Did you sell any or did you hold it?
I held it. I thought about it, and don't get me wrong, like it was a nice little payday. So, it would have been like I would have been up like 40% on the trade. So I was like, it wouldn't have killed me, but I'm glad it didn't. So I have one covered call against the position, and that I bought the other one back a long time ago. This one it's actually gone negative now. For a long time, that cover call was positive.
Well, and
So yeah,
Amazon was
I
just one of
think the
those
300
names.
strike might is definitely in trouble for this year.
And Amazon was one of those names that just kind of floated around 180 to 220 for like
Yeah.
forever. It seemed like eternity. It was you know, just going
Well,
across.
Bezos had to keep selling shares every month to at the 200 or 210 level to pay for that wedding.
Hmm. Well, I think it was also to fund,
Finance his rocket company.
yeah, Blue Origin. But
It's funny,
here's,
Blue Origin, speaking of Blue Origin, they're the ones you want to blame for your space trade gone wrong the last week.
you think so?
Yeah.
We'll see. I mean, I would not mind picking up more Rocket Lab. I'm pretty underweight on it. I don't even have 1% allocation yet. I would like a little bit more. Sorry to the folks who are heavy.
Yeah. I mean, look, I want SpaceX too, but I'm not paying that price for it.
So here's
So we talked about this last week, though. I'll wait 18 months after IPO to buy SpaceX.
yeah. I would definitely wait until after the lockup.
Yeah, I'm planning to buy SpaceX. I'm just not planning to buy it at IPO.
Here's the Amazon numbers. I mean, operating income, very, very solid. Net income up 77%.
Yeah, look, this is AI. Look at Google's numbers. Look at Amazon's numbers.
Well, hold on,
Look
pause.
at even this is what AI is doing for them internally.
Well, 16 billion of this jump here is Anthropic. So we have to pause because this is just like Google. This is kind of like
non-operating income. Okay, yeah.
Yeah, exactly. That's why the operating income numbers.
Right. So I was right. It is AI.
Yeah. I mean, either way, you're correct. Yes. Yeah, here's what it looks like trailing 12 months. But again, this is going to include the Anthropic numbers. Segment results, net sales up 12%. International. I saw a lot of people talking about this, the foreign exchange, right? So sales are up 19%, but then the foreign exchange. Guys, anyone who has access to a computer can look up USD versus Euro and do the math ahead of time. Like this is not a surprise to anyone ever. Just figured I'd mention it. AWS up 28%. I think this number sees a 30, if not 35 by the end of the year. I would not be surprised at all. Like if Amazon finishes a data center or two and like this number sees AWS at 35% growth, in which case everyone's going to lose their minds.
And somebody was crowing hardcore like right after close when this thing tanked 5%. And then the call happened, and yeah.
Who was crowing? Are you talking about like Chris Camillo saying everyone's lost their minds?
Oh no, crow at me. They were bragging about saying, yeah, I was right to tell everybody to sell.
Okay, got it. Now this is definitely going to be the ugliest chart on here, but again, not a surprise. Free cash flow going down. I like how they put this in here. Long-term, guys.
Long-term goal, right?
Don't shit yourself. Please trust us.
Right. We are paying attention. And that just means, like they'll be able to do that once. I don't think they want to be the first ones to let go of the balloon on the CapEx spend, but as soon as they do, that number immediately reverses.
The free cash flow, yeah. And the margins are going to improve too when that stops happening. If, say the CapEx gets overdone, they can always just take their foot off of the gas and stop spending on it. And then operating income and free cash flow will come right back. We saw what happened with Meta, which by the way, can they just rename that shit back to Facebook? Like Metaverse isn't happening. Can we just get the old name back? But when they overspent in 2022 and 2023, what happened as soon as Zuck stopped spending on the Metaverse, like the stock came right back.
Yeah.
Did you listen to the call at all?
Meta, like I had it on, but my wife and I were having conversations and we were talking about the business and everything. So I didn't really
Amazon.
pay too much attention. No, I didn't get to listen to Amazon or Microsoft. Google was the main one I got to listen
to. So this is from the press release. There was something interesting in here that I wanted to share. So I remember I sent you a text the other day about Bedrock.
Yeah.
So Claude Mythos preview is going to be on AWS. So that's the cybersecurity product Oh wait, you can't even see what I'm showing, can you? There we go. Wait, why is it stuck? What did I do? Let's try that again. There we go. Now we can see it. So yes, Mythos. Yeah, so this is a cybersecurity thing. So they've
Right.
got Project Glasswing. So they're basically going to work within AWS to help their AWS customers to identify their vulnerable points. And that's going to help them be a destination. You know, they're already the leader, so they're already the destination, but this further solidifies their cloud compute moat. You know, Google has Wiz and Microsoft is doing their thing. So these three cloud providers are just running away with the race because if you're Oracle and you don't have any of this shit, like
How are you
no
supposed to
one's,
get it?
yeah, how are you supposed to get it? Like you can't buy Wiz, it's already bought. Microsoft has been developing their own stuff. Like they're gonna have to figure something out because you can't just unleash an agent on the world without having proper protections and privacy, data security permissions, etc. So I thought that was interesting. Um, but this was what I really wanted to show you, which is, and I'm going to say this slowly because this is an insane statement. Processed more tokens on Bedrock in the first quarter, 3 months, than all prior years combined. And Bedrock saw 170% growth in customer spend quarter over quarter.
Jesus.
What? Like, is this a typo? I'm not selling shit, Dougie.
No.
They also got a SoFi shout out in here because I don't know if you have Prime or if you care about NBA playoffs at all. I'll watch the playoffs in Prime right now. They have not exclusive rights, but they have almost all the games on Prime Video. So the play-in game, the first 6 play-in games were called the SoFi play-in tournament. So SoFi
Hmm.
got a little shout out because they have to call it that. I think that's part of
Yep.
the sponsorship deal. They have to call it that. So what
I
any
hate that,
further
and
thoughts
I
on
hate that
Amazon?
SoFi spends money on that shit. I hate it so bad.
It's unaided brand awareness, as they call it, right?
I hate it so bad.
Just because it feels wasteful and like too broad.
Yeah. No, you're just spending money on celebrity. Spending money on athletes and celebrity. I hate it.
I mean, as the new entrant, you have to get your name out there, right? Like,
Yeah.
how else would you do it?
Anybody who's watching basketball already knew what SoFi Stadium was. They'd already heard the term.
Yeah, but I think the point of it is like a lot of this advertising, like they hit you with it again and again and again. Like maybe like the first 5 times you hear SoFi, it doesn't click, but then you hear it like the 30th time, the 40th time, and then like whenever a life event comes up and you need a loan or a credit card or you're like you've had it with your bank and this is the final straw, like that repetition of you hearing about SoFi over and over and over again. Well, now that you need a product, who are you going to go to? You're going to go to the one that first pops in your head. It's kind of like an underestimated marketing tactic. And yes, it does feel wasteful because it's like it's really hard to correlate. Okay, I spent $100,000. I spent $1 million on probably more than $1 million. I spent $10 million on this naming rights of the play-in tournament. It's really hard to quantify how you get those $10 million back because it happens over a long period of time. It feels wasteful in the moment, but I think long term, like they're not the only company that does this, right? Like most banks and insurance companies do this where they hit you over and over and over. Everybody knows who State Farm is. They still run ads.
Yeah.
Just
But
my
they
thoughts.
weren't but they were not but they only did that after they were a giant company.
Um, I think smaller ones do it too. I mean, think about
and running ads in my mind, but they have a chance to talk about their product. Their naming rights is not talking about your product.
no, but it's brand awareness. So it is different. You're right. It's not showing them what you do or how you do it, but it's just getting your name out there.
So didn't we just decide to sell off a position because they were just dealing in brand awareness?
What do you mean?
Didn't we just recently have a conversation with somebody and they just talked about how terrible this particular piece of ad spend he was getting was basically giving him nothing because they were just doing brand awareness and he wasn't getting sales?
Well, yeah, because that's
Generating
because
customers
they were
from it.
marketing towards a specific product, right? It was an online store. They were trying to move merch, and so they were looking for more of a one-to-one. Hey, I'm gonna spend $100. I need to see merchandise moved. Whereas the
Yeah, I'm
approach
going to
with
spend $100. I need to see more members on the platform.
well, you are seeing more members on the platform. Members are up 40%. Is that not proof of it working?
No, I still suspect that a significant portion of SoFi's member slash customer base is actually bag holding shareholders.
Interesting.
But for what it's worth, I signed up with them and I never deposited a nickel into the accounts I opened, but I'm still counted as a member, and that was 3 years ago.
I think they churn off at a certain point. I'm actually interested now to see how they count members.
If only we knew some people who were like really experts in that company.
Yeah, the man, the myth, the legend, Tanner, Future Investing, he would for
Yeah.
sure know. Okay, for your data, I've got a footnote here. 14.7 million members. 1 million of them are new as of this quarter. Almost half of them have signed up in the last 16 months because they ended 2024 with 10 million and now they're almost at 15 million. So almost a third of their members have signed up in the last year and a half. Let me get to the footnote here, see if it gives us any clues.
Yeah, I don't know if I'm.
And you can measure the engagement. I know Amit went round and round with people about like user engagement, wanting them to publish that, but I think products, you can use products as a proxy for engagement. So if you had users growing massively, but you had no products being sold, I think you could make the case that like, yeah, these need to be churned and these aren't real customers and they're not actually using the product. But when you see users up 40% and you see products up 40% as well, I think that's another positive indicator that they're not cooking the user member the members numbers.
Whatever. I mean, I still get the mail, every month with my account statement on it, which is zeros. Always has been.
Yeah, I mean that's fair. Again, if products were like flatlining, that's when I would start to question that user number, right?
Yeah.
No clues in the footnotes there. So maybe we can reach out, find out, or I can do some more Googling here. What did we have next?
I think we'll skip the next one. I think I've already made my acerbic comment on that. Yeah, oil for those of you who are doom and gloom because you see the price of oil rising, just remember it could be reversed tomorrow with a single tweet. And then if you celebrate that and then buy a bunch of stocks, keep in mind it could be reversed, double reversed again with a single tweet. So, trade on I should say, okay. I've been trying to figure out the right way to make this sentiment. And that is, you got to let stuff play out. You got to let stuff, we have to stop trading instantaneously on up to the second information. Because the signal is tiny, but we trade on it as if it is a world defining event. And we make massive moves on tiny pieces of information. And that's just not healthy for markets. And it's not healthy for your mental health, and it's not healthy for your portfolio, I believe. Not financial advice.
Yeah, you got to think long term.
Yeah.
You gotta think, hey, is the event that's happening going to still be a problem for your investment horizon? So if your investment horizon is 10 or 20 years, like it is mine, I'm not worried about the Strait of Hormuz at all. Not one bit, because I know it's not going to be a long-term problem. And if it is a long-term problem, solutions will be found, right? Like pipelines will be built to get around it. New oil production will be stood up in the United States and elsewhere.
Yeah. I mean, look, we already have done this, because remember a few weeks ago, everyone was so worried we were going to have boots on the ground on Carg Island, and we were going to have to blah, 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 blah. Well, the president or the National Security Council realized we don't actually have to invade Carg Island. We can just blockade it. And, yeah, they can get all their oil to Carg Island, but if they can't get the container ships through the Strait of Hormuz, well, then it's just as effective as if we had taken over the island. As far as Iran's ability to turn their oil into money. So there's a lot of heartache, up and downs, swings back and forth on tiny pieces of information that no one had a chance to say, okay, here's the problem. How do we solve it? They come up with a solution, they apply the solution, and that fixes the problem. They're just trading on the problem. Does that make sense? Like, once the problem is announced and everyone knows what the problem is, they're trading on that rather than trading on or waiting to see if there's a solution to the problem.
Right.
And then
yeah,
the
same thing happened with the tariffs too. Same exact thing.
Same exact thing. Everyone is in such a hurry to enter or exit that they don't actually think about, hey, there's people that are trying to solve this problem. I wonder if they'll be able to do it. They just trade on the problem, because that's what X feeds you. That's what the algorithms feed you. They feed you the problems. They feed you panic. They feed you panic and euphoria, and that's it.
So this, by the way, presents, this seems like a pain, right? Like you're constantly having to fend off noise to find signal. And if you struggle with that, just watch less news.
Yep.
But I think this is actually an opportunity for individual investors. And the reason is a lot of people are susceptible to that noise. So if you can be Teflon, Superman against it, well, now you've created alpha because you're making better decisions than other people who are also in the equity market. The second spot that it creates alpha and opportunity for you is if you have the ability to think long term when everyone else is thinking in quarters, then you can also find alpha there where you're finding assets that might be undervalued, 5 years from now. But if you've got active money managers or even just day traders who are looking at a situation and they're saying, oh, I'm not going to make money in the next 3 months or 12 months because I'm going to get fired by my client if I'm negative 20% year to date, like that's a real problem that they have to solve. They need to keep their client happy. So they're going to sell out of the position and they're not going to bag hold. That's our opportunity, because
Yep.
we can hold red if it takes 36 months, if it takes 60 months, if it takes 8.5 years, we can
They
hold.
can't force me to sell.
Yeah. Exactly. So
There's only one thing in the world that can force me to sell, and that is the United States federal government.
or the shadow government.
Nope,
Not even.
just the U.S. federal government, not even the shadow government.
No, we got to get a different nickname. I feel like that one's so coined and it's good.
Well, it applies so specifically to the person who coined it.
Right.
They did so well with it.
Is that mostly what you wanted to talk about with oil, or did you want to move to small caps?
Yes, that is what I wanted to talk about on when oil is just like I'm watching people panic about this every day, and they're just like, it's gonna, the price of oil is gonna go up, and then it's gonna cause inflation and blah blah. It's like, calm down, people, just calm it down. You'll be okay.
Right. What's going on in the small cap world? Is this like stock talk area? Are you talking
Yeah,
like one to 20 billion?
small cap was the wrong term for it, but we had somebody in the chat the other day was just like, Austin, you nailed it with that FIX trade. And and even on a day when we have the big four, I did feel like we talk a lot of Mag 7, and so I thought we should talk about at least a few things that we are interested in that are not kind of these big time you know market gorillas. So talk to us about Comfort Systems USA.
Yeah.
If
So
you're listening and can't see the chart, it has a 5-year growth of 1,993%.
yeah. So this was kind of right time, right place. I was looking at Quiver Quantitative. It's the website that tracks politician trades. So like every once in a while, I'll go digging in there if I'm just trying to generate new ideas, and I'll be looking and I'm like, okay, what are the politicians up to, right? Everyone knows Nancy, but she's retiring. But there's other politicians that are also they know what's up, right? They have an information advantage. Should it be banned? I don't know. Let's let other people figure that out. But as long as it's not and they have to disclose it, you can see what's going on. I started buying this stock back in here when I saw what was going on around 360. So it would have been, last would have been around September of 24. I started buying in here. Now I sold at 1200. So I sold after this run up right here, right about there in February.
Oh, you took the
Now,
short term? Oof.
yeah, I paid taxes on this. Now, I still made basically a 4x in a year and a half. Now, what this company does, this is related to the AI data center trade. This is a company, they're like an aggregator, so they do lots of M&A. And what they'll do, they do construction, they do HVAC, they do electrical work. And the way that they do construction is using modular buildings. So they'll go set up a modular building somewhere, and then they'll do like a long job. But they go around the country acquiring businesses in these areas. And if you look at the map of where they're acquiring these businesses, it's North Carolina, it's Texas, it's Minnesota, Indiana, Arizona, Utah. Okay. Notice I did not say Illinois, I did not say California, I did not say New York. So they have a really good understanding of the regulatory environment that they're operating in. And they'll go acquire an electrical company here. They'll go acquire an HVAC company over here. They'll go acquire a plumbing company over here. So they have all the components and the knowledge of all these technical jobs that everyone likes to talk about that are irreplaceable by AI. They have all of that technical expertise in an area that we could not be more short in. When you're trying to stand up all these data centers, you actually need like almost all those components. So their earnings growth has been off the chart. This is This is actually a good lesson for myself in terms of anchoring bias. Are you familiar with anchoring bias?
Yes.
Okay. So for those who don't know, it's kind of like um, say you're looking at Netflix and you thought about buying it at $300 and then it goes up to $600. In your mind, you had the idea that the fair price of Netflix was 300, it's now doubled to 600. I'd be stupid for buying it at 600 because it's going to come back down to 300. That's anchoring bias. You are anchoring to the previous price that existed. Um, that can happen on the sell side too. So I actually should have held this one longer. As you guys saw, I sold at 1200. It's at 1700 now. The reason I sold is because a lot of that came from multiple expansion. So like their price to sales is going nuts, but the fundamentals are still rapidly improving with the company. Um, I'm not an expert in like the small cap space, right? This is just a company that I happen to find because a politician was buying it up. I'm not the best stock screener for stuff like that. Like over half my portfolio is in two companies that everybody knows about, Google and Amazon. But what I did is I happened to see it. I started investigating. I looked at the numbers and I tried to figure out what the market position was. And I saw that they were, almost no debt. They were buying back tons of shares. Their margins were expanding and growth was accelerating. Um, so that's kind of how I saw that trade. And I wasn't able to hold it because there's really not that much information on it. Like I don't have visibility on the pipeline of their data centers. If they acquire a company, I have no idea if they overpaid or underpaid for that company.
Hmm.
If they go from a 2 price to sales to a 6 price to sales, I don't know if they can continue their growth rate because I don't know if 10,000 electricians can generate $10 billion of revenue or if 10,000 electricians can generate $100 billion of revenue. That's hard for me to measure. So, for a lot of those reasons, that's why I saw the multiple expansion happen and I got out of the trade. But I think anybody could have seen this trade from where I was sitting at the time that I made it.
Well, I didn't see it, so you know.
You just didn't happen
And
to see it, but had you seen it, I think you could have made the trade.
next time, help a brother out. That's all I'm saying.
I I put post on my X, man. I
I
was
know. That's where you find the alpha. It Austin finds alpha.
Here's some of the numbers though. These are like actually disgusting numbers. So I'll switch it to trailing 12 months. Like they have tripled their revenue. This is not a tech company, but it looks, if you look at their income statement, it looks
It
like a
looks like a tech company.
like this is not subscription revenue, guys. This is like them building shit.
SoFi
Uh
would kill for that chart.
like my goodness. Look at this ramp. This is absurd. And of course, a lot of that's coming from pricing power. Here's their EPS. They're doing buybacks at the same time. Um, but a lot of the pricing power here, it's leading to their look. You can see it right here in the gross margin. So I really like that the gross margin was increasing, which is obviously leading to their margin just ramping up. And that's because these companies are so willing to get their data center put in. It's like, hey, take the money, build it. I don't care, just build it. I need
Yeah.
tokens. Build the damn thing. Um,
I tell you about my the guy I met last weekend. He
uh-uh.
works for a company called Acme Construction Supplies in Boise, and he said that so they're working on some data centers in Idaho. And he said that his company has gone from like $100,000 revenue per quarter to like 2 million per quarter in a year.
Jeez. And this has been
That's just
another
yeah.
winner here. BSAT. I know Siege is in that one. Here was the multiples. Um, So like we've seen the chart, right? Like we just
Yeah.
looked at it. It's up 20x in the last 5 years. But like the multiple didn't really change that entire run up because they were growing into the multiple. This is where I started to get a little bit nervous, and not even so much the earnings because they can grow into the earnings. It was when I started looking at this chart that I'm like, okay, this like a tech company, a good tech company deserves a 10 price to sales. So so how much room does that really give us? And that's when I started questioning, okay, how much do plumbers and HVAC technicians and electricians, how much can you scale that? Like, are you going to work these guys 18 hours a day for unlimited work? So that
No,
was kind of
eventually you have to pay overtime too.
yeah. Yeah, so that's where I started looking
But if
at this
you're
and
on
I'm like,
cost plus contracts, you're doesn't really matter.
yeah, but at a certain point, the amount of work that you have to do is going to outstrip the employees that can do the work. That's kind of how I was thinking about it. So I'm staying away from this one right now, but like I would not be surprised if April of next year this thing is doubled again. That's just how awesome this business is. Is that what you wanted to talk about with small caps? I know you asked me about
Yeah,
it, but
yeah,
I'm
that
not
was
sure
that
if
was the
that's what you
type of
had in
thing. That was
mind.
the type of thing I wanted to at least make sure we talked to at least one or two of those types of companies during our episodes. So
Yeah, and I'm not the best at finding these like smaller to medium cap companies. Like Stock Talk Weekly does a much better job at that. Like he found Amcor, he found HII, um, some other ones. I think he's looking at Pure Storage or Everpure. They renamed themselves.
yeah.
What's the killer app?
So I was taking this walk today, and it occurred to me that everyone's talking about the cyclicality of everything, right? Um, and I'm listening to the Google's earnings, and I'm just thinking about what's the reason that I'm not heavily invested as a computer tech nerd my whole life. Why am I not heavily invested in semiconductors and memory and storage? And all the things that if you knew me my whole life, you would think Doug is going to just have these massive. That's all he's going to own is all that stuff, and I have very very little of it. And I realize I keep getting scared off of that stuff because I'm human and I get scared by people keep talking about how cyclical everything is. So I'm thinking, okay, well, what was the last big cycle everyone is like, oh, the next big bubble on AI, it's going to be just like 2001, right? And 2001 was they had all this dark fiber built. Well, the reason the fiber was dark is they built it all and no one knew what to do with it. Until there was one little thing that happened and it blew up. This one thing happened, and there was a few of us in the chat that are old enough to remember it, and most of y'all are too young. And it was like this viral. It was like the first viral thing that ever happened, but a switch was flipped, and all of a sudden it became a necessity for you to have broadband in your home. It was no longer enough to have dial-up. And when everyone had to have broadband in their home, that all of a sudden meant that all this fiber started going, getting. At least we saw a reason to have all this dark fiber, and I think a lot of visions for companies we see now that are using all this fiber, that was kind of like their proof of concept, but it was an illegal company. It was Napster. All of a sudden, everybody's MP3 and music lists, they were ripping their CDs into MP3s and they were putting them on Napster, and anyone could download any files you were sharing on your computer. All you had to do was connect to the network, and your library was now on the network, and anybody could download files that you were hosting on your computer. This is all super illegal now. But at the time, it was really small, and the record companies were not technological in any way, shape, or form. They were upset about it, but they didn't know what to do about it. It took them 9 months to a year to get the lawsuits going and have Napster ordered shut down. But we had about 9 to 12 months where you really had access to any song ever recorded, ever. And you could download it in less than a minute to listen to it. And so that's where massive libraries of owned music that was digitally stored came from. And then the thing that happened was Apple went out and made it legal. With the 99-cent download, they handled their business with the Beatles, got them paid off for using Apple Music. And yeah, Metallica sued Napster, so Napster had to shut down, and so it was all illegal again. All of a sudden, we had all this music, and Napster was just an easy place to find it. You could just search for whatever you wanted. Say you wanted, I don't know, a recording of Miles Davis from 1967, blah, 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 blah. Somebody had it, you could search for it and find it. It was on their computer. It's not like Spotify today where you search for a track and it's that published track. You had access to everybody's personal libraries. And then there were ways around it, but they were harder to get. But the point is, you had to have broadband you had to have cable modems, which were still real, or DSL, which were still really niche products. It was like there might be one or two people in your neighborhood that had a cable modem or a niche or a DSL connection. But then all of a sudden it was like, okay, well, that's what we're going to use all this for, but it's illegal. Well, Apple came along, they figured out how to get some record labels contracts, 99 cents per track that you could download, and all of a sudden the iPod kicked off, and now we're back to downloading music again rapidly. It's not as good as Napster was, where it was literally anything that has ever existed, you could find it on the network. But
so I was really young when this was going on. Do you remember like LimeWire?
Yeah, you were a baby.
And,
you were a baby.
BearShare?
Yeah, LimeWire. Yeah, LimeWire was like, it was kind of the spiritual successor to Napster, because it was for, a whole bunch of stuff. They started having software and stuff on there as well, but it wasn't as quick, it wasn't as fast, it wasn't easy to search. But yeah, but those file transfer protocols started popping up. And so those were technically pirated, like BitTorrent and stuff like that. But it was that Napster moment that was like, aha, here's the business. The distribution on the internet of all the music happens. And I guarantee you that's exactly where Netflix got their idea for streaming everything, all the video came from. And Apple said, okay, well, not only can you stream it, not only can you download the music quickly to your computer, you can also download it quickly to a device you can take with you. Boom, 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 boom. Now, all of a sudden, we can't build, once again, we're stuck. We can't build connection quick enough.
Now, history
because we know what to do with data now.
So history doesn't always repeat itself, but it often rhymes. So do you think chat in combination with Claude, those are like the two killer apps?
No. Chat, LLMs are they're probably the Usenet, but they're probably not the email. They're probably the Usenet of they're the news groups, which you're going to have to Google that yourself to find out what that was. That's ancient internet technology. The IRC chat maybe of the modern times. Like this is we're nowhere close. We haven't had our all this to say, we haven't had the Napster yet.
So you think it's still to come?
The agents, the agentic AI, that is probably like the first online services like AOL or Prodigy or CompuServe. We are not even to the World Wide Web yet of the AI trade.
What you're saying is it's still early.
I'm saying it is incredibly still early. It is a decade to 15 years of iteration on iteration on iteration. Like, because the people who dream in AI aren't born yet. They're not. Well, they might be born, but they haven't. They're still in grade school, right? The people who just use AI natively and understand it natively because they've fully grown up with it. Like they're just growing up. So what we can do is we can build them the infrastructure that they'll need to really make this stuff profitable. And that is something we have seen over and over. That history does repeat itself. The technology is invented, and then the infrastructure build out has to happen before the full value is captured a generation later.
Yeah, and I think as much I don't think it's happening so much anymore. Maybe the conversation's just always ongoing and evolving, but there seems to be like a lot of fear around overbuilding and then us having like all this infrastructure that we never use. One thing to keep in mind is
We'll
all
use
the
it.
people all the people running these companies, first of all, like the demand is already there and it's sustained demand. It's not like one-time demand. The second thing is all the people running these companies, they were alive and saw the first dot-com crush. Like Sunder, Satya, like all of them, Jensen, they were all there. They saw it happen. So do you really think that they're like just gonna repeat the same exact thing that they literally saw happen 20 years ago? No, they're not gonna go crazy and overbuild.
I mean, they were alive, but I mean, Zuckerberg was maybe in middle school, if not younger.
Zuck was younger, right? Yeah. So maybe Zuck's it doesn't apply to, but to the rest of them it does.
I mean, I honestly don't know how old like Sundar is. I mean, Tim Cook obviously saw it all, but I don't know. I can't remember the new guy's name. I don't know how old he is. He was probably like in his early. He's probably about my age, maybe a little younger. I don't know.
I mean, the guys at Amazon definitely saw it. They were a part of that dot-com crash themselves.
Yeah. So I mean, there's people there, but and you're right. Like they saw it happen, and they're going to harden themselves against it. But at the same time, like the infrastructure has to exist, and it has to be plentiful. It has to be overflowing so that it can be used cheaply. So that the cost to use the infrastructure is almost zero. That way, you can do the thing that it's designed to do for cheap.
Yeah. Yeah, answer questions and solve problems. We are taking questions in the chat, by the way. But we're gonna riff on the billionaire tax here for a second.
Oh yeah.
Doug, what do you got?
I mean, rip California, like it's gone. Okay. I mean, you flushed them all out. Congrats. They're leaving. You told them you don't want them. They're leaving. You told the oil giants that they're evil companies and you don't want them. They're leaving. You told the billionaires that they're evil. They're leaving. You told them they don't want their data centers. They'll build them somewhere else, and then you'll just have to pay for it. The problem is you keep handing out government services, which means somebody has to pay for it. And I mean, I got news for you. That's not how the world works. You're going to have to seize the means of production, but the means of production are always people. So eventually, you're going to have to enslave people.
A lot of people like
sorry, I get to the bottom real quick.
A lot of people look at this and they're like, okay, I'm not a billionaire. Why would I care? It's about capital formation and it's also about private property versus the state. So on the capital formation side, if you just constantly having the state be able to levy any amount of asset seizure, the the value of assets is going to decline really, really rapidly because the government's just going to take the money. And do you really expect the government to be able to efficiently reallocate the money? So, like, if you have this socialist idea that we're going to take this pool of money from these people and we're going to give it to these people, do you really think that they're going to take $100 from here and they're going to give $95 over here? No, it's going to be more like they're going to take $100 here, and if you're lucky, 20 cents of it gets
Go out the other end. Yeah.
goes out the
Because
other
we
end.
keep stacking up the middle. We keep increasing the size of the middle.
Yeah, because the bureaucracy just keeps getting bigger and bigger and bigger. The state of California has had their revenues double in the last 4 years. So it's not a money problem. Like they have tons of money. Um, even after their budget has doubled, has anything gotten better or worse in California in the last 4 years? Well, that's really an obvious question. If you say better, I'm going to send you a referral to a doctor to get your head checked. So the second thing is, so the first is capital formation. Um, and then the second is just around like waste entirely, which is just related to what I just mentioned. Um, when you have people who see their tax money getting wasted, it's incredibly demoralizing. Why would I not cheat on my taxes if I see how you guys are spending it?
You won't be able to report on how they're wasting it because they're stopping Nick Shirley. They have the Stop Nick Shirley Act as well.
Sure.
That is getting passed.
But
So
what's going to
they'll be
happen
able to
is
defraud you, and you won't be able to tell anyone about it.
what's going to happen is all the billionaires, okay, who are already getting taxed. If you want to say, hey, we need a progressive tax system, the top 1% in this country already pays about half of the taxes. And if you're in the bottom 50%, you pay less than 2% of the country's taxes. So again, the top 1%, who everyone says we need to tax more, they're actually paying for half of everything. And the bottom half of the country, so roughly 150 million people, are paying 2% into the budget. So we already have an incredibly generous tax structure. What's going to happen to these states is the people paying the taxes are going to move out. Capital goes, or money goes where it's treated best. Okay. Why would I sit around in California and wait for these people to steal my money when I can just move states? Not everyone's going to be able to do that though. Sergey can move, Larry can move,
Yeah.
right? Elon can move. These guys can move. Who can't
Yep.
move is the 1 million tech workers in Northern California who have their entire life, their families, their jobs, their schools, all of that's there. That is who's going to end up footing the bill. Is
Oh, it's going
everyone?
to be worse, bro, because they all bought these homes for, $2, $3, $5 million. But then when the companies leave and they all have to sell their homes at the same time, they're going to be upside down millions of dollars on their homes.
Yeah, because the property values will drop. Yep.
Yep.
So
And then they're going to have another crisis, and that'll be another thing that the government's going to have to step in and raise another bunch of taxes because there's no more billionaires. Now you'll have to raise it on the millionaires, which is everyone in California, because they all own, or all the California homeowners.
I'm sure you didn't see this clip because you were busy today. This is the Seattle mayor. So different state, but same shit, different toilet.
I think the claims that millionaires are going to leave our state are like super overblown, and if the ones that leave, like, bye.
They just laugh. Oh, and then they applaud. Okay, yeah.
They literally have no clue what they're doing and what's about to happen if they do that.
Well, don't forget, what they want to do is break the system so that they can take it over. Break the system or stress it to the point where it fails, and then they say, look, your system didn't work, we have to take it over and make a new one.
Yeah. See,
So,
capitalism is not working because we broke it.
right. They're like, okay, well, you gave them a nice car to drive, and they're like, well, I'm not putting oil in it ever. See, the 6 months later,
the car broke down.
The car doesn't work. Well, how much oil did you put in? I didn't.
Something I saw that was interesting is there. So let's just walk through like the bill itself. So California has a prop system. So in most states you can't vote directly on something like this, but in California, if you get enough signatures, they call it Prop 1, Prop 2, Prop 3, whatever proposition, and then people can have a direct vote on it. You just need enough signatures 850,000 is how many signatures you actually need to get a prop onto the ballot. They've now gotten enough signatures.
Yep.
So all they're going to have to do is pitch this to anyone who makes under $150,000 as, hey, we're going to take money from the rich and we're going to give it to you. Obviously, the second order effects are not going to be at the top of their.
Considered at all.
Yeah. So it's going to be a really easy sell, and they're going to pass it. Now, something that I saw that I thought was interesting is that it doesn't actually specify a dollar threshold for like who is going to be taxed. Like apparently, and they can go to Sacramento, and the state can actually modify. Say they set it at like net worth above 1 billion. The state government can actually bring that down to $1 million or whatever the hell they want to make it. So then the wealth tax would actually apply to everybody. So it's kind of the Trojan horse method of, hey, we're going to introduce a new tax. So those who are familiar with the history of the income tax, they call it a slippery slope fallacy, but it's not a fallacy to me if it continues to happen, where they introduce a tax for a certain group and then they expand it to everybody.
Right. It's not a conspiracy theory if it was true.
Yeah, so I'm really worried about that, and I think you're going to see, the states that are business friendly and who take common sense approaches to a lot of things, you're going to see them continue to win. But at some point, isn't California going to need a federal bailout? Like,
Yep. Well, they'll get it as soon as the next administration flips blue. Then the next time that there's that the Blues control the presidency and the purse strings, they'll just bail out California.
If we flip blue, like the Congress, if both houses flip blue in November, you know what I'm going to go out and buy? MasterCard and Visa. If the Clarity Act does not get passed, there's basically, maybe I shouldn't say zero risk, but like if the Clarity Act doesn't get passed now, when's it going to get passed?
That's a good point. Probably not for a long time.
It
if
could,
ever.
It could literally be like a decade.
Yeah. Or I mean, hey, look, they're just going to bring Lena Khan back and her ilk. Yeah. There's just going to be a large anti-technology push, and I should say anti-big tech push. All of the people who said trust the science will not be talking about technologists.
We could do a whole nother hour on people who were saying trust the science 4 years ago who now definitely don't want to trust the science today.
Right. Hey, I was one of them, but I mean, at least I feel like I'm scientifically literate enough to get myself in a little bit of trouble, but I also understand, hey, when we have more information, you have to reevaluate.
Sure.
And certainly during the period of trust the science, it was still the data was very murky. So the conclusions you made from the data, or I should say the source of the data was very murky. It wasn't very reliable. So the conclusions that were drawn on said data need to constantly be reevaluated. And some people just have refused to do that thus far.
It seems intentional to me, though. It seems like the people pushing like the degrowth narratives, it seems like they have.
Yeah. The Bernie Sanders, Elizabeth Warren people,
let's
they're
call
going to
it
get their way.
incentives. Yeah, they have incentives to say what they're saying, and it's not because they actually believe what they're saying. I'll just leave it at that.
Well, I think some of them are true believers. I just think they're fools.
Yeah,
and we're just
maybe
stuck
I
with them.
shouldn't attribute to malice what can be described as pure ignorance. But
There you go. There you go.
Wong says tech has 2 years left. TikTok.
Yeah, he's not wrong. Tech has like if you don't have your data center built and operating in 2 years, or you don't have your new nuclear stuff, because don't forget how much Team Blue also hates nuclear.
You know who that's actually good for though? If you already have your data center up and like they ban building new ones, that's really, really good if you
Yep.
already have yours.
Well, that's what they never understand is they basically force the window closed so that no new operators can get in, and then they decry the monopoly of the people who have it all. It's like, well, you created the regulatory environment that doesn't let new players get in, so
Right.
they compete on price.
You created the barrier to entry so that competition can't do anything about the
And then you talk
oligopoly
about how
that you like to
competition
complain
doesn't
about.
work.
That they like
Again,
to talk about the tech ruling class, and then like they're going to be like, okay, let's lock in your moat for cloud services for the next 20 years.
yeah. Oh man, I need to not broadcast this stuff online.
Hey, you put it on the docket.
Look, and people might think that I'm all like one team here, and trust me, we could talk a long time about how pissed I am at a lot of this grift going on Team Red too, especially a bunch of the crypto shenanigans.
Yeah.
It just pisses me off. This is because you could have just been you could have made a shit ton of money. You just could have acted like a grown up adult and just been responsible with the public trust.
Right.
But no, and then we also know that both sides are trading on insider information as well. So I don't know what will be the end of any of this. And oh my gosh, like are we not gonna are like, are we going to listen to the doomers? Are those going to be the only opinions allowed on YouTube and Facebook again?
Doomers?
Well, when they flip back to Team Blue, they're going to go right back to the playbook they had before, which is, leaning on Facebook and YouTube and, other platforms to shadow ban people or ban them outright.
Maybe they do. Maybe they try a different strategy. I'm not sure.
I mean, X probably gets taken down.
No, I think Elon's
Blue,
got too
Blue
much money
Sky
at this point.
Blue Sky will have failed, but or hey, now that it's okay for the government to buy interest in companies, maybe the government buys Blue Sky interest next time, and just stands up, the communication sides of the world that they believe in. Maybe this was always happening. It was just very soft played, and now it's just out in the open, and they're doing it like right in front of your face and saying, "How what are you going to do about it?"
Or we just have better means of research and stuff gets uncovered better, right?
What better mean of research? I mean, the LLMs are going to be what defines truth from fiction, and they're all going to be trained on Reddit.
I just mean so let's use weapons of mass destruction as an example, like very classic disinformation or misinformation campaign from the government. It was pretty hard to verify that. Nowadays, you can go on like Google Earth. There's videos all over X and YouTube crowdsourced from people who are there in that country. You could verify it. Like there's just a huge dispersion of information that didn't exist 2 decades ago. So that's what I mean by like it's easier to unearth stuff, right? Like I'll give another example. Ilhan Omar's winery, right? People were able to figure out within hours that shit was fake. That wouldn't have been the case 20 years ago. 20 years ago, she might have gotten away with that for probably a year or two before people like breaking 60 Minutes news report. No, like people find out that what's fake and what's real pretty quickly on X sometimes. You've got Nick Shirley's out there running around with a camera.
But like they're gonna have the Stop Nick Shirley Act in 20 something different states here in a matter of months, and where it is illegal to disclose something that could lead to harm or tarnish the image. So it's not libel, but it's like if it could lead to harm or violent feelings against someone, whether they are committing crimes or not.
Yeah, I'm optimistic that that's not going to get anywhere, because anyone could have violent feelings about anything. Like I could say right now that I think Tesla is going to get cut in half, and like people could get violent feelings towards me, could they not? Like,
no, but you're not releasing information that is causing them to go after a specific person. But actually, June makes an excellent point here, and I was thinking about this just before she typed it. Is, when the blues come back in, you might want to take a look at buying some calls on Enphase, or now might be the time to do it. Because I bet I would not be surprised if Enphase pumps 20% overnight if the blues take Congress, both branches of Congress, which I think they will.
Well, Trump hates solar, so he would veto. So don't you need a blue POTUS?
No. Trump wouldn't veto any legislation for something he wanted just because it had funding for solar in it.
Oh, so you're saying that
if they gave him the military budget he wanted, if it had included a whole bunch of solar crap in it, he would sign that in a heartbeat.
So I like First Solar better than Enphase, actually.
Okay.
Do you know about First Solar?
You can.
Well,
you can like what's Chamath's solar company. You can like that one for all I care. Just that whole sector is gonna suddenly get a lot of love.
Yeah, the stock nuclear,
right? Sell your nuclear, sell your crypto, sell your neoclouds,
sell your Robinhood.
Yeah. Oh, for sure. Sell any of your financials, probably, except for the big banks. JP Morgan will still be good. Like you said, Visa, MasterCard are probably still good.
First Solar is not Elon. That's Solar City. Tesla owns Solar City.
Tesla has their own solar. Yeah.
Yeah. First Solar is they're actually based here in Arizona. I could literally walk to their headquarters from here, but they do. They're the only American manufacturer of like industrial level solar panels. Most of our solar panels we get in from China, which is partially why Trump has pivoted away from a lot of it. First Solar makes their panels here in America. So they're obviously way more expensive, but then you actually control your own supply chain. Ticker is FSLR, I believe, First Solar.
Raven Terp says to buy solar and EVs. Yeah, as long as those names are not Tesla.
I'm not buying Rivian or Lucid either.
Well, one of them's going to get all the love. At least one of them's going to get all the love.
Probably Rivian. They've stayed out of the news, whereas like Lucid, they're owned majority by the Kingdom of Saudi Arabia.
Elon Inc. is going to get rocked by the next blue administration.
Doug, I think you talked on this a few episodes ago. Like the metering law in California. Are you familiar with that?
NEM3. Yeah.
Yeah. Can you talk about that for a sec?
So, June saying high energy prices here could cause a spike in residential solar. So, yeah, it could cause I have full disclosure, I have residential solar. I was sold too much of it because I didn't fully understand what I was buying. And that is a problem for people who are shopping for residential solar. They probably buy way, way, way too much. So that leaves a lot of people with bad taste in their mouths.
But the idea
That
is
said,
if you buy too much, you can sell it back to the grid, right? That's the
yeah,
idea.
but you can in California.
Right.
You can't. You could under NEM 2.0. So if you bought and had your contract in, then you could. But now in 3.0, you're no longer selling your excess back, because it also breaks the power grid. California now has so much residential solar during the day that they can no longer operate their heavy equipment power generation. Heavy equipment, okay, power, and I'm going to do a very poor job explaining this because I have a very low level understanding of it, but I could probably give you enough here to give the chat a place to start from doing their own research. So we take in DC power and it has to be switched to AC. So the inverters, which is what Enphase does, they build the inverters and they switch direct current to alternating current. So you have either a positive or a negative that'll come down here, but that's not how we do things when we generate power in America. We alternate current back and forth at 60 hertz. Strangely enough, all of the turbines and heavy equipment we have that generates electricity operates at, wait for it, 60 hertz. So that means even if, and we actually saw this happen in Spain on Earth Day last year when they celebrated the fact that they were like 100% green or something, and renewables, and then they went offline that day. They lost their whole power grid for like a week, and a bunch of people died from no electricity. So even if you lose your fuel source at these large facilities, there's enough momentum built into those turbines and those turbine generators to continue to produce electricity. They're massive, they're heavy. Just because you stop running steam through them doesn't mean they stop on a dime. Okay, it's like turning around an oil tanker. Okay, it takes a long time for those things to spin down. They can continue to produce power while you deal with balancing the load across the system. Okay, if a cloud comes in front of a residential solar area, the production drops almost instantly. You have no continuous generation the instant those solar cells get cut off. But you had to have all the equipment off on the industrial size generation because the grid requires the input and the output to be the same at all times. Is that making sense? So you're generating all the power you need from solar at this instantaneous moment. The instant there's a cloud that lowers the production or something like that, you have to find another place to generate the same amount of power from if you have the same draw. So you would say, okay, we'll turn on the natural gas plant. Well, that takes a little while to spin up and to come up to speed, to start producing steam and come up to speed, or the coal or oil fired or nuclear, whatever. So now your grid is imbalanced. Now you're going to start tripping people's breakers.
So,
or you're going to damage the transformers and shut off the whole sections of the grid.
So bottom line here, from an engineering standpoint, even if California saw higher energy, residential solar is kind of maxed out and saturated.
Yeah, because it generates all they need during the day, and their most efficient stuff is offline. But it can't be brought online instantaneously. So what they do, here's the funny thing, in order to save the environment, we've installed a whole bunch of solar, residential solar, but they have to keep the equipment running and continue generating all the carbon monoxide and carbon dioxide at the natural gas plant, so that the generator continues to run, so that the boiler continues to operate. They just don't connect it to the power until they have demand either surge or generation from the solar starts to dip. But either way, the plant continues to operate. They just basically disconnect it from the grid. So now you're like double dipping on the waste generation.
Yeah, it sounds like a complex puzzle. I'm not going to be the one to sort it out, but there's smart engineers who are working on that. I think we made it through our,
that's why they got rid of the resale. So you can't sell your power back to the grid anymore because they don't need it.
right. But that was like part of the sales pitch too, was that like it was going to help you save money.
Yep.
By getting
So
the
now
solar
you have to buy a battery so you can at least charge up your home battery as well.
Right. Soon they'll outlaw the batteries. They'll say the state has a monopoly on energy storage or something. I don't know.
Yeah. How do we plan to power electric cars? Well, with electricity. I mean, in the right place, an electric car is really just a nuclear powered car, if you're getting your electricity from the nuclear plant.
I think that's all we had on the docket. We've been going for a little over 2.5 hours. Thanks,
Sorry,
everyone.
I kind of ranted there.
No, you're good. You're good. It was a good question by June. So thanks everyone who joined. Wong, Tommy, Venom, Raven, June. Thanks everyone for joining tonight. Next week, I think we're gonna try and find Siege. Try and get him on. We've been wanting to get him on for a minute. He's our small cap expert, I guess we can call him that.
Emerging technologies.
Yeah, emerging technologies. There you go. Yeah, he's definitely, his record is solid enough to show that. Oh, Laura too. Thanks for joining, Laura. Have a good night, everybody. We are out.
Good night, out.